What is going on, guys? Today we're going to talk about SPDR's Bloomberg 1 to 3 month T-Bill ETF, ticker symbol BIL. So if you're looking for another place to store some of your cash, this might be an ETF you can definitely take a look at. It's a very popular ETF, as you can see, $45 billion assets under management. Similar to SGov, just a little bit differently. I like to switch back and forth between SGov and BIL on a monthly basis. But yeah, let's go ahead and dive into it. Let's look at the ETF and let's see if it might make sense for you to kind of store some of your cash here, right? So it's a Treasury BIL ETF, so it's going to pay roughly 4%. But let's go ahead and dive into it here. So currently, $91.57. That is the share price of BIL. Has an expense ratio of 0.3156. So what it's going to do, right? It's going to go out and purchase 1 to 3 month Treasury BIL ETFs or Treasury bills to provide investment results that before fees and expenses correspond generally to the price and yield performance of the Bloomberg 1 to 3 month U.S. Treasury Bill Index. So they're seeking to provide exposure to publicly issued U.S. Treasury bills that have remaining maturities between 1 and 3 months. Short duration fixed income is less expected to fluctuations in interest rates than longer duration securities. And it looks like they rebalanced this on the last business day of each month. So options, it does look like options are available. I've not looked at the liquidity, but not sure. I doubt this is going to be a huge ETF that you can sell options on, but looks like that is available. 4.12% yield, nothing crazy, but it's just your typical T-bill interest rate. Looking to see performance, nothing crazy as well. 1.35% year to date. It's a fixed income asset, and you can see some of the T-bills that they have here: June 25th, July 25th, June 25th, and so forth. There, so they're all purchasing about a month out. The sector is obviously 100% treasury based. And yeah, so that's pretty much it. What we're going to take a look at, I want to look at the distributions here recently. So this is on stockanalysis.com. They're predicting a 4.29 annual dividend based upon their most recent distributions, 4.68% dividend yield. I think that's a little bit high. But looking at the most recent distribution in May. So if they're able to continually pay out, 31 cents per month, looks like 28, 32, 31, 32, 38, 33. So let's just say 31 to be a little bit conservative, right? 31.1. Yeah, so we'll say 31 cents. So 31 cents divided by 91.60. So you're getting roughly 31 cents per share that you own of BIL. So times 12. Yeah, so roughly 4%, it's close to that number there. I don't know if you guys can see that on my screen here. Let me switch. Okay. Yeah, so you guys can see that. I just did a basic calculation. I did 31 cents divided by 91.60 and multiplied by 12. But in order to, I guess, make so if you wanted a certain dollar amount, like if you're close to retirement, you want to kind of replace part of your income, the way that you can do this is, right, so if they're able to pay 31 cents, it's a little bit less than what they have been paying, right? So 31 cents is on the lower end, except for back in March, but we'll just say 31 cents divided by 91.60. So that kind of gives us a estimated number per month. Yield, and if you multiply that by 12, that kind of gives you the annual estimate. 4% is definitely pretty lower than what they're predicting here. So yeah, it's a little bit more conservative than the numbers. But if you kind of want to estimate, right? So say you want to make, we'll just use 4%. So say you want to make $1,000 per month, you'll do $12,000 divided by 4. That's going to show you pretty much how much you're going to have to invest into this T-bill fund in order to make that type of money. So a lot of money there. You can see over $300,000 would have to be in an investment that pays, right around that 4% range. And then we'll scale it up even a little bit further. Say you want to make like, I don't know, 6 figures. So 100,000, that's $10,000 a month. Let's back up. 100,000 divided by 0.04, it's going to be like 2.5 million. Yeah. So that kind of gives you a ballpark, right? Definitely really conservative, but if you're investing in CDs or if you're wanting to kind of shoot for that 4 to 3 to somewhere between 3 to 5% yield from your cash, this ETF can be something you can definitely take a look at. Like I mentioned earlier, SGov is another one that I go back and forth from. So like sometimes instead of receiving the dividend, I'll just sell out of SGov and roll over to BIL. Just kind of keep in mind, if you are doing that, you have to understand the wash sale rules. So pretty much if you sell an investment on May 16th, you can't buy back into that investment until 30 days has passed, or the wash sale will apply there. So that's kind of that ruling there. But these are pretty similar investments, so I kind of go back and forth sometimes. Like if I want to like just flip and I don't want to get the dividend, I'll just flip it and I'll make some capital gains. Same kind of structure though, right? So the price of this ETF is going to go up every single month, and then whenever it comes to the ex-dividend date, it's going to drop by that. Yep, the dividend there. So you can see that's SGov, and same kind of idea with BIL, right? Goes up, hits the ex-dividend date, drops by the dividend, goes up, and so forth there. So just kind of keep that in mind. But once again, this is SPDR Bloomberg 1 to 3 month T-Bill ETF, ticker symbol BIL. If you're looking for a T-Bill ETF, this is definitely a very popular one out there. Like I talked about, over $45 billion in assets under management. Let's see how that compares to SGov. Yeah, so pretty similar to SGov as well. They're neck and neck. But yeah, once again, this is a BIL. If you're looking for a Treasury Bill ETF, we kind of went through some numbers here, kind of to project some income and how much you would have to have in the fund to make a certain dollar amount per month. Do keep in mind, this is not financial advice, obviously, and then also these yields can change at any point based upon the Treasury and what kind of direction they decide to go. But currently, they're paying around 4%-ish there. So keep that in mind. But yeah, guys, that's going to be it for this video. Hope you got some value from it. Let me know down below, is this an investment that you're allocating some money to? Are you putting your emergency fund in similar types of investments as these, or are you shooting for much higher yields, closer to what some of the yield max funds are paying? Let me know in the comments down below. Would love to hear your thoughts. Until next time, please like and subscribe down below. Cheers.